Hello and welcome. My name is Brandon Wendell. Welcome to the Wendell Effect. This will be the weekly market overview for the Indian markets for the 22nd of January 2023. So we'll go ahead and jump into this. Just a reminder, we are not a broker-dealer investment advisor, and we are just looking at this from an educational standpoint. We're not giving any personalized recommendations or telling you to buy, sell, or hold any particular securities. Past performance, no indication of future results, and we're not subject to trading restrictions. So we got a position in security initiate one at any time. So, I'd love to hear from you. If you could, stay in touch with me. Tell me what you're liking, what you're not liking, what you'd like to see, anything you'd like me to talk about in the future as well. You can hit me up at brandonwendell.cmt@gmail.com. Don't forget to follow me on Twitter. I'm quite active there. I post nearly every single day. And you can also find me, obviously, on the Wendell Effect here on YouTube. Anyway, last month was kind of a mixed bag here. You see Reliance was down quite a bit, over 6%. And for the most part, we were kind of held up a little bit by technology services. As you see, TCS and Infosys were holding us up. Banks were definitely mixed, except for HDFC Bank. So, unfortunately, the bullish momentum that we had stalled out, basically, is what's happened. And last week, we're seeing a little bit of the same for the most part. Not really a whole lot of direction going on. And that may be what happens for the next month or so in the Nifty, unfortunately. Right now, you see the last 2 weeks were basically doji candles, which is sideways movement. So we didn't have any resolution of this sideways move. We've been in for about a month, and we have very little momentum to go with that. So unfortunately, not seeing a whole lot going on here, and there's nothing that really I see as a catalyst to get us moving in either direction. So looking at that weekly chart, we can also look at the historical momentum that we typically get, and it doesn't look any better. You look over the last 25 years for the month of January 22nd to February 22nd, you pretty much go sideways with almost no return, less than 1%. So if you're a day trader, this might be fine. We're going to get volatility back and forth. But for swing trading, it's really a non-issue. You're not going to be able to find great opportunities for a little while. So be careful. Don't overtrade. Going down to the daily chart, you see the lack of momentum. It was slightly bearish and has really just gone sideways for a little while. We retraced from the highs about 38%. Actually, we hit 50% just before the end of last year. Now, once again, tested it. It'll be interesting to see. If we don't make new highs or retest the prior highs, this could be setting us up for a move down to the 61.8, which would be 17,565. That's also a projection from the highs and the retracement as well. So there's overlap at both that point and down at the next level at about 17,200. So immediately right now I'm seeing that we had a lack of a move to retest the highs. That shows weakness, and we're likely to break down to that 17,565 going on for the next week, maybe 2 weeks it'll take us to get down there. On the 4-hour chart, again, same thing. We tried to rally here at the end of the week, and you can see that we failed to break above 60 on the RSI. That shows us a lot of bearish momentum in charge, not bullish, and therefore we're likely to continue to move to the downside. So dropping over to Reliance. By the way, if you're interested in using that Season X tool that I use for finding the seasonal movements over the last 5, 10, 15, even 25 to 50 years sometimes, here's the link for it. You can just go to https://www.seasonx.com/about IMREF equals JRF55W. And that'll go ahead and give me a little credit there for referring you over. But anyway, if you're interested, great. If not, doesn't matter. It's up to you if you want to use it. Looking at Reliance, we're not going to get a lot of relief out of Reliance. Over the last 25 years, this month, January 22nd to February 22nd, Reliance pretty much goes sideways with under 1% return. It's slightly bullish, but not by much. And we're actually seeing more bearish pressure. We came down and tested demand, but we did it with the RSI below 40, which means we had plenty of bearish momentum to push downwards, and that's exactly what we did. We got through the demand, we got a little bounce, and that's because we're hitting our first projection target. It looks as though Reliance is going to continue to push down towards the 2343. Now be careful, there are earnings coming out, but I'm suspecting that this is going to continue to push down unless we get some sort of positive divergence where if price moves and breaks this low, but the RSI does not make a new low. If it makes the same or higher low, that's a positive divergence. Expect a little bit of a bounce, but really not much. We might get to 2550 at the high. I just don't see a whole lot of positive momentum here at all. This is TCS on the daily chart, and sorry, I got that covered up there a little bit. What happened here? So I'm going to move that over more. There we go. Now you can see it. TCS on the daily chart. And basically with TCS, we had a pretty good pullback from the highs, about 50% roughly, and now we're trying to project a bit higher. We are having trouble getting into bullish territory, though. The momentum keeps stalling just shy of 60 on the RSI, which is a cutoff for bullishness in the market. So I'm not getting that bullishness we need to continue to move up towards our next target, which would be 35.05. In the meantime, I expect a little pullback first before we go higher. And that means that it may be a bit choppy over the next week or so. Looking at the pattern for the last 18 years on TCS, it shows that it's just sideways. We don't get a lot of reaction in either direction, although slightly bullish, 1.5% average gain. But the last 3 years have been negative. So again, we're seeing that choppiness and most likely sideways motion in these markets. Infosys also just looks a little bit bearish here. We had the impulse down, corrected halfway, and are now set to continue to move down. We never got into bullish territory on the momentum side, and it looks as though we're going to project downwards towards that 1412. So look for more weakness there in Infosys. TCS goes sideways, Infosys goes down. We're likely to see that sector drag to the downside as well. On the banking side, HDFC Bank finally broke to the upside, but be careful here. We've broken to the downside, and it was a false breakdown before we broke back up. We've been sideways for quite some time. We need to see several closes above this level, the 1642. Otherwise, you can see we had two closes and pulled back, and it collapsed. So that could happen again very easily. If we don't get a bunch of closes this week, I would say 3 days of the week, if we don't close above 1642, be suspicious, and it may be a fake out where we're going to break back down to 1590. If we can stay up there, then we're probably going to pick up some more momentum and possibly get up to 1728. So keep an eye out for that. According to the last 18-year history, you can see that HDFC Bank actually does go up 60% of the time, but a very weak gain, 0.5%. So not really getting a lot of momentum there. Again, we could be just a bit of sideways after we broke out. Maybe we just go sideways to establish a new floor before price goes higher. Going into the Nifty, Bank Nifty, overall, this is bearish for this time of year. In the last 18 years, again, I apologize, it's over covering some of that. There we go. You can see the last 18 years, we have only 29% moves to the upside. So you can see most of the time it drops. And it's about a we'll say a little over 1.25% drop. So expect Bank Nifty to be a bit weak this month. Looking at the chart, you can see that we're currently in a retracement. So we're not falling very fast because we came with a lot of bullish momentum to break to a new high. So we're getting kind of a weak pullback, but the candles are trying to push higher. There's no momentum. So unfortunately, it looks as though we may go a bit sideways here. Going down to the daily chart, it's pretty much the same thing. We lost our momentum. We're just going sideways. And I just don't see a lot out of this. We could get stuck in a range between 41,300 to 43,500. Just kind of stuck back and forth. And on the 4-hour chart, it's just looking the same. You see we're nice and tight between 42,804, 42,000. We're just bouncing back and forth. And we're going to get more of that for this week coming up, unfortunately. Again, good for day trading. You can go back and forth and play the intraday momentum, but it's not good if you're looking for longer term moves. Got some new trade ideas and some follow-ups on the old ones, so we'll go ahead and get into those. Tata Steel is looking like it's going to be very, very bearish. From the 21st of January to the 2nd of February for the next couple of weeks, it looks like 80% of the time that moves down about 3.5% for the average return. So look for shorting opportunities if you can on Tata Steel. Now on the daily chart, we're coming into kind of a wide zone here where we have rally, base, and collapse. So it is quite wide between 125.25 to 133. Targets are at 107 for the next buying area and way down at 93.75. So we could see a pretty good sell-off here, even though we had bullish momentum. We're coming into that selling pressure soon. You can go down to the 4-hour chart and look for an opportunity there. Instead, it's a little bit tighter, and it's only 125 to 127.50 basically. So you want to put your stop somewhere above that if you're going short. And what you have to look for, though, is a divergence. Right now, we are overbought, which you can stay overbought. That means we got bullish momentum. We should break through the zone. So for the entry, you need to have a negative divergence to trigger the entry. That means prices have to go into the zone, but the indicator needs to be making lower highs or at least the same highs while prices are making higher highs. Okay. If you're not familiar with divergence, you can look at some of my videos I have on Chart School for the Wendell effect, and we'll talk a little bit more about that there. Anyway, that's one way of looking for a short opportunity that can give you some possible intraday opportunities down. I believe that's about all I got. Unfortunately, there wasn't a whole lot there. If you got any questions, again, please email me at brandonwendell.cmt@gmail.com. Hit me up at TraderBDub on Twitter and follow me there for some more information on the regular. I usually post every day. And of course, subscribe and like so that way you can follow us here on the Wendell Effect here on YouTube. I want to thank you very much for following me and being here with me. Aljo, take care, everyone.